Stability. The markets have been chaotic for the last 1 month. They became panic and irrational with the presumed contagion of the so-called liquidity crisis that gripped the ILNFS, the financial behemoth of the nation. People went crazy suspecting the crisis would end up in a major economy-wide catastrophe. The result was the markets witnessed violent swings and indices crashed many times. More astonished is that the small and mid-cap stocks lost 50 to 70% of their market value. While the storm in an oil barrel and the fall seemed endless, a INR in exchange to USD worked like fuel to the fire. The spreading panic in the market strengthened the bear operators instantly like steroids. They took charge of the markets. It was total. Meanwhile, the bulls maintained a wait-and-watch strategy in view of the impending monthly settlement and rollover of contracts in futures and options trading on Thursday, the 25th of October. The rationale in that approach was to buy the stocks at a much lower prices later. They still wait for the right time to begin an onslaught on bears. The tightness of liquidity is gradually losing its grip. Futures and options settlement is over. In the same time, the positive Q2 and H1 results began flooding the markets. A number of companies, particularly in the liquor, steel, software, chemical and retailing sectors are coming with excellent performance. The crude prices are falling. They are now at $77 per barrel, lower than the earlier $80 a barrel. The exchange value of rupee against US dollar following its negative correlation with oil prices began strengthening. The rupee closed the week on Friday at 73.47 per USD with a slight gain. The RBI expressed its confidence by declaring there was no systemic problem in the finance sector given the quality and continuation of loan disbursals. The central bank also clarified that there is no need to simplify the capital adequacy norms. It is pumping funds into the finance sector. The SEBI also increased the upper limit on buying the assets of NBFCs to 3 times. It allocated a large sum of 45,000 rupees crore for this purpose, while the centre, after reviewing the performance of state-owned banks in the September 2018 half-year, will recapitalize the 6 PSBs. The essence is that the issue of liquidity is a blip only, not a contagious crisis. With the support from RBI, NHB, SEBI, the issue will subside very soon. Capital markets will regain stability. The week was so good concerning the corporate results. The steel industry performance hardened fantastically with several companies came out with super performance including Galant Ispat Limited, Indian Metals and Ferro Alloys Limited, Tata Metallics Limited, Godavari Power and Ispat Limited and JSW Steel Limited. The steel sector is to maintain firm performance in the next 2 years. The government imposed anti-dumping duties on steel imports for the next 5 years. Steel shares are very good for long-term investment. Similarly, the paper industry is also presenting investors a bright performance. MME Paper's performance reflects the trend. Then the automotive sector. Subros Limited, PPAP Automotive Limited, Sundaram Clayton Limited, Kna Axles Limited are among others which declared fantastic profits. Hindustan Oil and Exploration Company Limited exhibited extraordinary performance. Alembic Pharmaceuticals Limited, Intellect Design Arena Limited, Akshobta Fiber Limited, Bharat Electronics Limited and others announced tremendous results. The restructuring of Arvind Limited offers a hidden opportunity through which the investor could get a gain of 12% in the face value of the post-restructuring holding. As expected, Cox & Kings Limited stock appreciated after the cum date, the date on or before which the investors have to buy the shares of the restructuring company. The yet-to-be-listed shares of the demerged Forks Division Company may give a decent return on investment in the long term. CESC Limited, which fixed the record date on the 31st of October 2018. So Monday the 29th of October is the cum date. Investors may get 15 to 16% gain on the current cum date prices. There is a buyback opportunity in the Cochin Shipyard Limited Kantar. The company will be buying back shares at a price range of 455 rupees. For this also the cum date is Monday the 29th of October. The current market price is about 380 rupees per share. SKF India Limited also announced buyback of shares at 2,100 rupees while the market price hovering at 1,800 rupees. The board is yet to fix the record date.